The midterm election season is finally over, except for Georgia's Senate runoff in December. I'm kind of glad that it's over because I started to get tired of getting phone calls and text messages every single day from the election campaigns. And for full disclosure, I am an independent voter and I'm not affiliated with either political party or crypto brokers like FTX. Okay, was that too soon? I always vote because I came to this country 23 years ago and it's my right to have my voice heard on the ballot. And I always tune out all the advertising campaigns, text messages, and phone calls that I get from the candidates. I like to do my due diligence to make sure I'm voting for someone who has similar views on local and national issues. Now, this video is not about my political views or which political party serves better for your personal finances. And I've said on my channel multiple times in the past that you are the only one who will care about your finances and your future, not the government. You have to be the one who wants to achieve financial independence and retire early. You have to be the one who wants to create generational wealth for your kids and grandkids. If you're subscribed to my channel, you know that I focus on the FIRE movement. If you're brand new to my channel, it stands for Financial Independence and Retire Early. Can the outcome of the midterm elections make an impact on your FIRE journey? Not always, but sometimes. The midterm elections or any election could potentially make an impact on our taxes and the stock market if a certain political party is trying to pass a bill that could hinder our ability to invest for early retirement or enjoy certain tax benefits. The Build Back Better Act was a perfect example from 2021 because Congress tried to get rid of the backdoor Roth IRA for people who make above the Roth IRA income limits. This video is just to show you the stock market performances when the Democrats are in charge of the House or Senate or when the Republicans are in charge of Congress. The intent of this video is not to directly influence your decision to vote in the future, but it's for educational purposes only. So with that in mind, let's get into it. Now, Wall Street or investors in general like to see a divided government, and stocks tend to perform better in that scenario. If a Democrat is in the White House, then they would prefer to see Republicans in charge of Congress. And since 1950, the S&P 500 has outperformed whenever voters choose to have a Republican-controlled Congress and a Democratic president. Since the Democrats took control of the Senate, it'll be interesting to see how the market performs if the Republicans take control of the House. And according to U.S. Bancorp Investments data, since 1962, the S&P 500 has jumped by an average of 16.3% 12 months after the midterm elections. And here are the S&P 500 historical returns listed by election year. According to US Bank, when Donald Trump was in office back in 2018, Democrats gained a net total of 40 seats, but the Republicans took control of the Senate by gaining 2 seats. The S&P 500 was flat 3 months after the election, and then the S&P 500 gained 8.6% 6 months after the election, and it gained 12% year over year. Now, let's look at it when Barack Obama was in office from 2008 to 2016, and the midterm elections in 2010 and 2014, the Republicans took control of the House by gaining a net total of 63 seats, which was like the highest loss by a party in any midterm election I ever saw in my lifetime. Now, the Democrats also lost 6 seats in the Senate, but still had the majority. The S&P 500 performed really well 3 months after the elections with an 8.7% return, 15.2% return 6 months after the elections, but only 5.9% year over year. In 2014, the Democrats lost 13 more seats in the House and 9 more seats in the Senate. The Republicans in 2014 took complete control of the House and the Senate with Barack Obama sitting in the White House as a Democrat. The stock market didn't do as well as other midterm elections with only a 3% return year over year. Let me go back to when George W. Bush was in office, and this is as far as I'll go back to keep the video relevant. 2002 was pretty much at the end of the dot-com bubble burst and a year after the attacks on 9/11. The Republicans gained 8 seats in the House and maintained their control, and gained 2 seats in the Senate and gained total control of Congress. I don't know how many of you watching this video remember the early 2000s, but it gained over 18% year over year since the 2002 midterm elections. In 2006, the Democrats regained control of the House and Senate, which led to a 12.4% return year over year. And according to Schwab, in 17 of the 19 midterm elections since 1946, the market performed better in the 6 months following an election than it did in the 6 months leading up to it. And is this midterm election year any different from the previous ones? Absolutely. We're experiencing inflation at a 40-year high, geopolitical tension in Europe, and the S&P 500 is down about 17% year to date. And here's one word the market hates to hear or see, and this is uncertainty. If the Democrats' agenda is to raise taxes in the year 2024, and the Democrats take full control of Congress and the White House, then the probability of raising taxes that year is high, right? And many Wall Street investors would prefer to see government policies that favor businesses. However, most Wall Street investors only look at how the stocks will perform in the next 3 to 6 months, and they don't really look at how stocks will do beyond 12 months, 2 years, or 3 years. Now that the Democrats have regained control of the Senate and the Republicans are looking to take control of the House, there is a possibility of legislative gridlock like we've seen in the past and making it difficult for Joe Biden to pass his agendas at the House. And let me show you this simple chart from US Bank to understand what to expect in the coming years or in the future elections. With the Republicans taking control of the House, there will be some limited major changes to tax and spending policy. With the Republicans taking full control of both House and Senate, the president will likely face gridlock and brinkmanship. If the Democrats take full control of Congress, then they could most likely pass several initiatives like the Build Back Better Act that I mentioned earlier in this video. But what's really interesting is that when with the Democrats in charge of the House, Senate, and the White House between 2020 and 2022, the Build Back Better Act still didn't get passed due to several oppositions in the same party. Now, am I going to change my investment strategy based on who gets elected? The simple answer is no. You're probably wondering why I'm even making this video, because we all should know that our investment strategy shouldn't be impacted by the election results. You would be surprised about how people act with their money based on what they hear on the news. As a FIRE investor, I like to focus on the long-term strategy. In the short term, I want to keep an eye on the Federal Reserve and its fiscal policy. I want to see the pace of economic growth and if the Fed raising interest rates will have any impact on the stock market and the housing market. It's not a secret that the Fed is tightening monetary policy to raise interest rates to reduce the overall demand, which should reduce inflation. The key word is should. I'm going to adjust my portfolio based on the performance of each stock, ETF, or mutual fund, and I have stocks that are severely underperforming in 2021 and 2022, and I'm looking to buy more of those stocks because I believe in their long-term growth. And are we going to see a recession in 2023? It's a possibility. No one knows that for sure though. If the stocks continue to trade at a low value like Google, Amazon, Apple, Meta, and other stocks, I'm going to keep buying them. My FIRE plan is 9 years from now, and I should have over $3.7 million invested because I'm going to consistently invest in the market. And let me show you my investment priorities going into 2023, and I'll make a separate video about it next month as well. Before I get into it, I encourage you to get my financial independence resources for free by visiting firesetchat.com/contact. And if you need help with your personal finances like budget, savings, and investments to achieve your financial independence, you can schedule a free one-on-one 20-minute financial coaching session by visiting firesetchat.com/coaching. I never sell any financial course products like many YouTubers do, but I am dedicated to helping every one of you get out of debt, get on a budget, and start saving on your retirement. You can use my coupon code FIRE30 until December 31st to get 30% off on all of my financial coaching plans. Anyway, my FIRE plan or my FIRE investment strategy is simple. First, I want to make sure I'm investing in retirement accounts that will make my money last from age 59 and a half until I die. My core retirement accounts are my traditional IRA and Roth IRA, followed by 401k, TSP, and HSA. My wife and I will max out every one of those accounts until we no longer work for ourselves or our employers. Second, I want to make sure I'm investing in our early retirement from age 45 until 59 and a half, and that's mainly in our taxable investment accounts. We consistently invest in mutual funds, ETFs, and stocks. Did I change my investment strategy when the Republicans took control of the House? No. Did I change my allocation strategy when the Democrats took control of the Senate? No. Did I change my early retirement strategy because someone I don't like getting elected to the White House? No. History tells us that any election outcome doesn't make a direct impact on stock market performances. I'm going to continue to invest and stick to my fundamentals while paying attention to any shifts in monetary policies or economic outlook. And if you want to know more about how to start investing in your financial independence, be sure to check out these two videos So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.